Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. And if you look at the TV or you look on any financial websites, you will see red arrows around the world as the volatility continues and the global sell-off and the global headwinds continue to pretty much be too much for our markets to withstand. You know, about a month ago, we talked about the parabolic move in the Shanghai, or maybe even 2 months ago. And always sell into parabolic moves, don't chase it, and then all of a sudden, the Shanghai market somewhat imploded. You look at the chart of the FXI, we talked about, how to maneuver this. First things first, as a trader, once you get below the 8 and 21 day, I talk about getting into tactical approach versus, portfolio approach. And right here, when this broke 49, that was a shot across the bow. And then look what happened when it took out the 200-day. Now, I do understand, the reason why we get out right around the 8 and 21 day is because you want to test the 200-day, because the 200-day is a lot below it. But even when you cut below the 200-day, I know it hurts, to take things off the table if you're more of a macro player. But, below the 200-day, and when you stay below the 200-day, it means real selling. And the pattern that developed here was this bear flag, where here's your pole, here's your flag, and then we talked about volatility rising again if this were to resolve to the lower side of it and create a lower low, and this 38.88, which has been mentioned many times in my note, broke, and now all of a sudden, we're getting some continued downside in, the FXI. So for the FXI, I would say next real level here comes in a bit closer to 36, and then, there's a lot more support down here at 32. But overall, you don't want to see a parabolic move fail like that, and that's what created a lot of overseas volatility in Asia. And then about a few weeks ago, when Goldman said I would buy European equities over U.S. equities, I think that was the last relative strength day it had. We talked about can Europe lead, and it's been actually leading to the downside. We talk about the HEDJ that tried to break above its descending channel and said, okay, if it could hold 62 to 64. Maybe it makes sense to try and stay with some exposure to Europe, but if that gives way, be careful. And if you look at the HDDJ, you will see that there was a big clear-cut move to start the year, and look at that, above the 8 and 21 day, one of our rules, stay long if it's above that, and then it pretty much broke right around here. You had just your small little head and shoulders pattern here that gave you the first move down, okay, and then you had the volatility into July, it came back up, and then you didn't see any kind of commitment to that move off the lows. And then we talked earlier this week in Morning Call about how the HEDJ is now below the 200-day. It broke the 8 and 21 day in here, below the 200-day. Now you're getting downside follow through in the DAX. Okay, I would look to see what happens here. This is the July low here in the HEDJ. We'll see if you get some kind of support there. But every time you wake up in the morning, and like I do at 4:45 and start tweeting, you look at overseas, and recently, Europe's been very weak, and that's been led by the DAX, and that's why we look to see overseas for sentiment. And every time, in the note, I talk about what the Shanghai is doing or what the DAX is doing, because they've been kind of leading our market, and it hasn't been a tailwind whatsoever. It's been a big, huge headwind, and our market's been trying to hold up, but there's only so long you could do that. So that led us into yesterday. I've been talking about how most of the institutional reports I read want liftoff, not put off. They want good news. They want some things a little normalized. Just get it out of the way. And then yesterday when, the doves were flying a little bit and pretty much, they said that they're not doing September, some of the volatility picked up, but we closed near our lows. And the technical damage that's been adding up amongst all the sectors, really started to show its face, and that's why I could actually come in today flat equities. I'd like to have been short, but I'm not. At least I could, see what's going to happen here to create some opportunity. So you take a long-term look here at, the SPX, and you will see that here is the lower end of the range. Okay, this is a sideways channel that's been going on for 7 months, and it's been very frustrating for a lot of traders. If you want to take a broader look here to see kind of what's going on trend-wise, it's getting pretty close to, being a little like this is one of the gradual trends here, which takes you to 1900, and then this is another one that, pretty much is, coming close to being tested. Actually, you could draw it like this, where here's that lower, the lower end, and you're coming right into that apex, which is really right around 2040. Some people are calling for a huge correction. Okay, I don't know exactly what's going to transpire here, but all I do know is that this is an important spot around 2040 if you're looking more macro. So, maybe take a picture of that, to see take a long-term look of what could happen if things kind of hit the fan. And if things do hit the fan, then you also have another level down here, a little bit closer to 1980. So the question is for today, what do you do? So let's get back into today. That is the future. This is today. And basically yesterday you had a close below this small little rising channel. And they tried to save it a little bit, but there was a lot of weakness out there. Below the 8 and 21 day, remember this, 2095 did not hold, and boom, we closed weak. That's what, that's why I don't have any spiders on long. So the question is today, what's going to happen here? Are we going to be able to hold this 2062 area into this more, this is I think the simple 200 day, or not. So 2062 to 2063 is one area which we're going to be, kind of probably opening near. Then you have a small point of reference at 2052, and then really, the major comes into play closer to 2040. If we were to hit this 2040 to 2050 in the first hour fast, I might try and buy a little bit for a trade, but I'm definitely going to be careful. And if we do end up reclaiming this little area, then we expect a lot of the same. But as of right now, this is your zone. I think there are a lot of people that would love to see this break and create a new trade, but we shall see. And you kind of have to be just remember here that this is big. This is where that actual trend line is. So if markets want to fall apart, they could fall apart fast, and we'll see what happens here. I'm not saying that you could go all in short there, but just be careful if you are buying into this and it doesn't hold. There could be an air pocket down to 1980 at some point. So we shall see. I think today's trade will tell us a little bit more. You have some stronger sectors that could give us clues on whether or not we get a real break, or this is just another day where we open down 15 to 18 handles and we come off the lows and we stay in the trend. One of them is the Qs. What's the Qs going to do? All right, Qs have been tight. Qs have been holding higher. You have support 1 coming across here. If the Qs hold this spot of 109.49, it'll probably mute some of the downside. And then you have here 108.05. But if this little area doesn't hold and it wants to see the 200-day, chances are downside pressure is going to persist. Also, another sector that's been stronger is the banks. So now if we don't have September liftoff and rates aren't going higher, the banks have been cheating higher, thinking that they might get hit. So that's something you want to watch. If the banks have a down day but don't get crushed, we probably don't have one of those down 300-400 down days. We just have what's been the norm. But if they do, you have to be careful. So watch the XLF. XLF right here. You want to write down today maybe support 1, support 2. If the XLF holds right here, I think the downside will be muted. If it breaks that, you have that low from late July, and then here is your 200-day, in the XLF. So we shall see. Two groups that have lost leadership that we've been discussing, has been the bios and the Russell. For the past month, they've gotten weaker, especially the Russell, and then recently, the bios. So let me show you the bios real quickly. In the bios, we talk about trends, and trends are great until trends change. And if you look at this trend here, this one got broken right when it took out the 50-day moving average. Okay, that was your sign to maybe reduce some risk to the bios. The 50-day moving average held for quite some time. Okay, and now here the trend and it broke. So now you see big support going across here, and from afar, it looks like you might be able to see this. And if you see a void from 360 down to 342, the market's going to be under a lot of pressure. And if you want to see what a head and shoulders top pattern looks like, this one's kind of blaring. So with that being said, you have to be careful here around 360. If it holds, again, same old market. But if this 360 area doesn't hold, this 342 could happen fast. So I just want to show you what can potentially happen. Then you go to the Russell, which you had a breakout failure way back here. So breakout failure, there where it poked its head above the prior high, then couldn't hold it here, came back lower high, and now it's below the 200-day. If this doesn't hold this 118 area, Okay, there's an air pocket down to 114. So we have lots of air pockets that if the normal support that's been the norm during this trading range doesn't hold, you could see. So you don't want to just catch a falling knife. You don't want to just cost average, and think you can get bailed out. If you want to try and buy a dip, let the first 15 or 30-minute low be put in, buy versus that, and then if that happens to break, get out of the way, get a small paper cut. Don't just buy, and think that you're going to be bailed out, because that's happened so many times in the past. Just throwing that out there. Now, as far as leadership stocks, there's about 5 or 6 go-to names that are still holding up, while so many other names have been taken out to the woodshed. So the question is, can those go green today? If those leadership go-to names go green, again, we'll probably come off the lows, and it's just another August day. But if they start to play catch up to the downside, again, you better be careful. So one stock that's been weaker, that's not really a go-to name, but it's worth noting just for psychological purposes of the market, is Apple. Apple obviously fell out of the range right here when it broke below 122. Then you had this red dog reversal here where it's trying to be somewhat relevant. So if you take a close look here, we'll see if there's a trade. I'm going to look at this early morning. If it happens to hold this 114 and tries to go green, that'll probably help the NASDAQ, and that'll be a decent trade. If it doesn't hold 114, you then have 112, and then you have the low here of 109.63. So, see what happens here with Apple. Holding 114 would probably keep things somewhat intact. If it breaks 114, it'll probably bring up some volatility. Google was real strong yesterday, holding in there. So, see what happens today. Does Google go green? If so, that downside will be muted, and really the big support here comes in around 680. So we'll see if this could hold up. Amazon hasn't really done much, but it's hanging in there also, a little go-to status. So we'll see if Amazon, could stay up. So, I would say if it can get to this moving average, which I believe is, what is that? That's, I'm not sure. I think that might be the 21-day. 519 might be a good spot to see if it holds. And if that doesn't hold, you then have 513. So here would be a good spot to maybe test or hold, and then you have that. This resistance here has been defined, so no power in the market. Then you also have, you have your Netflix. Netflix has given us lots of trades in the past few months, and 2 days ago it tried to push you 126, it kind of failed. You've had some follow-up weakness on it, so now we'll see what kind of, what is Netflix made of? And Netflix right now has been above the 8 and 21 day for a long time. So, I will look to see if there's relative strength here in Netflix today, and if it could hold this 118 area. If it can, again, some leaders holding up. If this doesn't hold, and it plays downside catch-up, you have to be careful. This small little breakout failure, some guys actually probably got short, and now you're getting paid. If you're short it, look to maybe cover into here, and we'll see if this is a spot. If this holds this area and goes green, again, chances are, it's just an ordinary day. So, so far the theme is, in my head is today an ordinary day, where Dow in the first half an hour goes down 200, and then we put a low in and we could trade long versus that low and make some money, especially if you come in flat. Or if you're caught in some longs, maybe give things some space, let them put the low in, buy versus that low. But if that low gets taken out, you got to salvage a trade, because again, if it's not an ordinary day like we've seen in the past 5, 6, 7 months, you could really get hurt. And why sit in that? We talk about being in stocks and portfolio approach when they're above the 8 and 21 day, and which we're not. And now you have all these sectors below the 200 day, which is pretty scary. You go to, just real quickly, let me show you what happened here with the XLE, which has been a horrendous sector. Look what happened back here. Okay, this is when it was strong, when it could do no wrong. And then you had what? A head and shoulders top pattern, okay, after a nice big long trend. Broke that. And then look, this is where the 200-day was. So if you didn't sell it when it broke here, or you didn't sell it here, or look at this calculated short you could have had anyway, you could have still sold this above 90. At this point, everyone loved oil names. Big dividends, could do no wrong, et cetera, et cetera. Broke below the 200-day, stayed below the 200-day, and then pow. Okay, that is friggin' disastrous, but that disaster could have been avoided if you followed my moving average rules. And then obviously, your, your tier system. So, more recent action now, okay, I was trying to play XLE to the long side and got stopped out yesterday. I thought perhaps there could be some commitment to this, right? A move off the lows, and I said, as long as it holds this, I'll stay with it, but it didn't. So you have to be very disciplined and get out. So on that move lower, I got out. Now I guess for psychological purposes, see what happens here. See if XLEs hold this 66.29 or not. Okay, you're going to hear all day long on TV about oil, $40, $40. You know, see what happens if it breaks 40. If it breaks 40 and starts to cascade lower, probably raises volatility also, because something different, you know, and something new, and everyone will obsess about it. And it's worth noting that's what's been going on TV, is knowing what's going on there. Okay, as far as some other names to look at, maybe that can go green. Facebook's one of them, but again, you know, you want to make sure that that continues. I've been long Facebook for the past few days. I'm not long it overnight, just because I didn't want to be long in the market today, and still looks good. You know, if Facebook's going to hang around and be strong, it probably needs to hold this 94 area. So I'll see if that happens. If it doesn't, and they start to get to everything, you know, you then have a bigger level down here. So, you know, this will tell us if the downside will be muted. If Facebook goes green today and some of those other go-to names go green, again, ordinary day. If it comes to 94 and it can't hold and falls fast, chances are, you know, much more deeper downside. As far as, you know, the car stocks, which we go over a lot, yesterday I got stopped out of MBLY. We talk about, again, expensive names and momentum names are good to keep as long as they're above the 8 and 21 day. If they break that, chances are they could get into some type of corrective phase. So if you look at MBLY and you look, you know, yesterday it looked fine, right? It had a really nice breakout, you know, above this area. So I was long, and I said to myself, as long as it stays above the recent breakout, it's not a breakout failure after a huge move it's seen, because look at the size of the move that MBLY has seen from this red dog reversal low. I'll stay with it. But what happened yesterday, boom, potent down move, so that got me out. And you know, if you were in a high tier thinking it can go to 70 or 80, which it might have been able to, and it still might be able to, yesterday you reduce. And now, if you did reduce yesterday, you know, you have a chance to see if it holds the 50-day. Okay, it's been above the 50-day for quite some time. So that's what we'll measure here. The 50-day right now is, I believe, 57.13. So see if this holds going across. If this doesn't hold going across, you know, maybe it corrects further. Again, it's come a long way, and there's a big fundamental bearish piece in seeking alpha, and you know, so sometimes it takes a little time to work off. So if, at least if you get out of the way here, you could always revisit. And then if it doesn't hold this, that shows you on the technical landscape something changed, and it could come in further. So you just want to make sure. That's our job. Our job is to measure composure, how things can change on an active intermediate or on a macro basis. So for macro-wise, it hasn't changed, but on an active momentum basis, it changed, and that happens from time to time. You know, Tesla had a down day yesterday, pretty potent. So if you were in it, this was your first little, you know, clue to get out of the way. And if you got out of the way, maybe if some people even got short, maybe there's a trade versus gap. That's the gap from the Morgan Stanley big upgrade. So 250.50 is worth a look. If this gap doesn't hold, it gets filled, and your next spot comes in a little closer to 246. So support 1, support 2. And then, you know, as far as the banks, again, you know, do they sell these banks off because liftoff is now put off? You know, look at Goldman Sachs. That'll give you some clues on what could happen. Okay, if it's going to be a muted response, then this probably holds here. This is 199. So if it holds 199, chances are they're not really selling the banks. If they sell that, here you're back at the 200-day. So that would be, you know, very important. That 200-day is 196. So, you know, I would look at that level and see, does that hold, you know, for Goldman Sachs? If this doesn't hold and it loses the 200-day, that's another group that's, you know, another one bites the dust, and that'll tell us again, giving us clues. So today, when you come in and futures are down 15 to 18 handles, you have to figure out, you know, what clues could tell you if you could buy in the hole for a great trade, for a reversal, or can you buy for a quickie, or, you know, do you have to just stay away because, you know, nothing's going to bounce and we could have a trend down day and take out bigger areas and have more of a macro move there. You know, some signals yesterday that, you know, equities could be under pressure were two, okay? One, the TLTs took back the 200-day, okay? So the TLTs, you know, after two corrective moves, one here from the accelerated trend, another here, you know, you had this small lower pivot. So if you sold there or sold there, you had the luxury of buying into that breaking of that small descending channel. And then, yesterday engulfed and took back the 200-day. So now you'll see what happens here. Maybe it fills this gap up to 128. Then also metals, which have acted like, what, for the past 2 years, gave you a breakout trade here above this lower pivot. So that's why sometimes trading these lower pivots are good, because if you're not in the pain of it, you get to embrace the volatility. But again, you have to measure it, because you've seen so many of them fail. Here's the first move. Then you had a small reversal here. It gave you some follow through, and now you're getting a bit more upside. So if you happen to be in the metals, I still don't love it. But if you're in that trade, maybe piece out a little bit into here. And if you did cover your shorts into that down move, I'm sure some people will start to maybe test here between 109 and 110. And then you have another area coming into 112. So putting it all together, the main important thing here is what's your time frame, and what is the composure of the market. And will today just be an ordinary day that we've experienced in the range, or will it be different? If you're an active trader, an intermediate trader, you're probably coming in relatively flat, maybe short, because we're below every moving average. If you're a macro player, and you're wondering whether or not you really have to de-risk because some big levels are going to, break, we're coming close to those, and we've tested them and they haven't broke, but, they're always intact until they're not. So lots going on here, but it's also August 20th, and there's not a lot of people around, so, it could be very thin. So whatever you do what's comfortable for you. Today if you come in flat, there could be a lot of opportunities. What I would do is, again, map out the levels that I showed you here. If you read my note, print it out. I put levels of, all the go-to names of support 1, support 2. I also talked about support in all different indices to know, what would be, a decent spot to hold, and where could we go if we don't, and figure it out. But what you should do is take it slow, let things develop. Recently, because of all the corporate buybacks, they're not able to really do it in the first 15 minutes. So you get a first 15, 20-minute swoon, and then somewhere around 9:50, 10 o'clock or 10:15, things grab their footing, because that's when all the corporate buybacks come into play and puts pressure to the upside. So at least, let that first 15, 30-minute low be established before you try and put some risk on versus it. Today is Thursday. It's been a long week already. There's been some volatility. There's been some trades. Hopefully you're hanging in there, because it hasn't been an easy summer. It hasn't been an easy year. So if someone's telling you out there that they're killing it, congratulations to them. I know a lot of guys on the long and short side that have been pushed around a little bit, and the tape hasn't been one where they give away money on trees, but they rarely do. Scott Redler, T3 Live, The Morning Call. Have a great day, and I'll see you maybe at the recap.